Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Rio Tinto said on Wednesday it saw a sharp V-shaped recovery in China as stimulus spurred industrial activity, helping its first-half profit handily beat market expectations. Rio Tinto is the first of the major iron ore miners to report results from a first half marked by coronavirus-induced disruptions but also by high iron ore prices. That rebound helped it report half-year underlying earnings of $4.75 billion, beating a consensus of $4.36 billion from 16 analysts compiled by VUMA. Iron ore accounted for 96% of Rio's underlying earnings. Rio is the world's largest iron ore miner. It declared a record dividend of $1.55 per share, up from $1.51 last year and bang on expectations, but refrained from paying out a special dividend as some analysts had hoped, suggesting a more cautious view for the remainder of the year.
Moving on to the top news in the energy sector.
U.S. oil refiners in coming days are expected to report the worst second quarter results in a decade, with production outrunning demand while pandemic-related closings have sapped summer travel. Fuel consumption has tumbled, with latest U.S. data showing a 25% drop on auto travel from a year earlier and a 75% decline in passengers at airports. Refiners get the bulk of their profits from domestic fuel sales, with the June quarter among the biggest for travel. The 7 top independent refiners, including Valero Energy Corp., Phillips 66, PBF Energy Inc. and Marathon Petroleum Corp., are expected to post losses. Valero on Thursday is expected to report a per-share loss of $1.41, according to IBES data from Refinitiv, compared to a profit of $1.51 a year earlier. The group's average per-share deficit will be $1.05, according to Refinitiv, compared to a $1.65 profit a year ago. Refinery crude processing rates remain about 2.8 million barrels of oil per day, or 17% below the seasonal average over the past 5 years, according to the U.S. Energy Information Administration. Profits also were hurt by high inventories, as refiners ramped up in anticipation of business reopenings.
We will now look at the top news in the agricultural sector.
Russian agriculture consultancy Sovikin said on Wednesday that it had reduced its forecast for Russia's 2020 wheat crop by 400,000 tons to 79.3 million tons, as dry weather is worsening conditions for spring wheat. Russia, the world's second-largest wheat exporter after the European Union, is harvesting its crop after dry weather in its south, where the main grain-producing and exporting regions are located.
Next we have agricultural price moves.
Chicago soybean futures ticked down towards a 2-week low on Wednesday on expectations of a bumper U.S. harvest this autumn. Corn was flat, while wheat rose for the first time in 3 sessions. The most active Chicago Board of Trade soybean contract had dipped 0.1% to $8.86 minus 3/4 a bushel by 1100 GMT, not far from Tuesday's low of $8.83 a bushel, its weakest since July 16. Wheat rose 1.3% to $5.30 minus 1/2 a bushel, and corn was unchanged at $3.30 a bushel.
We will now take a look at energy price moves.
Oil prices rose on Wednesday after a surprise drop in U.S. crude inventories, though gains were capped by demand concerns after record increases in COVID-19 infections in some U.S. states. Brent crude futures rose 38 cents, or 0.9%, to $43.60 a barrel by 13:45 GMT. U.S. West Texas Intermediate crude futures gained 26 cents, or 0.6%, to $41.30. Inventories of crude oil in the United States dropped by 6.8 million barrels last week to 531 million barrels, data from the American Petroleum Institute showed on Tuesday. Analyst expectations in a Reuters poll were for an increase of 357,000 barrels. U.S. government data is due later on Wednesday.
Moving on to metal price moves.
Copper held near two-year highs on Wednesday as the dollar weakened on the prospect of more stimulus from the U.S. Federal Reserve, while factory data in top consumer China cast doubts on prospects for a speedy economic recovery. 3-month copper on the London Metal Exchange was down 0.1% at $6,468 a ton in official trading. The metal hit a 25-month high of $6,633 on July 13. LME aluminium lost 0.2% to $1,726.50 per ton. Zinc rose 2.1% to $2,293.50. Lead fell 0.1% to $1,867.
Finally, we have the most recent news on the financial market.
The US dollar fell to a two-year low on Wednesday as pressure built on the Federal Reserve to strike a dovish policy stance amid a surge in coronavirus cases. Markets expect policymakers to hold fire, but rising infection rates and increased tensions is leading some analysts to predict strong forward guidance from the Fed. Against a basket of other currencies, the dollar fell 0.4% to 93.41, its lowest level since June 2018. It has weakened more than 3% since the last Fed meeting as yields on benchmark U.S. Treasury debt have fallen more than 20 bits per second since then. The euro traded at $1.1762, up 0.3%, though it has stepped back from Monday's 22-month high of $1.17815. The dollar traded at 104 yen and 82 sen, down 0.25% on the day. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.